So the California wildfires have hit a lot larger than we expected, and this was one of those things that we talked about in previous videos where we were hoping that something like this doesn't happen because the effect on insurance companies is going to be massive. Let's go over and discuss how the wildfires are going to affect insurance companies and how it's going to affect you as a consumer no matter which state you're in. By the way, if you are in California or if you're one that is affected by this, my condolences go out to you. I am going to put in the description phone numbers to each of these companies. So if you're trying to get a hold of your insurance, phone numbers that I find. So if you have a better one, use it, but I'll try to link you to somebody that you can call if you need assistance. As of the making of this video, 16 deaths, unfortunately, and over 20 billion with a B dollars worth of damage. That is far exceeds anything that anyone has planned. On top of the California law has essentially outlawed predictive models. One, no model probably would have ever predicted this. And two, if it did, it probably would have saved a lot of insurance companies a lot of money. Unfortunately, that wasn't allowed. And so because of that, they are forced to pay more premium than you would expect. Really good for the consumer, but let's dive in and explain why that's also a negative for the consumer as well. So in order to understand that, let's find out what type of risks have been happening. So California has been really a hard market to get insurance in general. The reason that is because they've had these wildfires more often, but not as severe as this one. And what's happened because of that, insurance companies have wanted to increase the price that a homeowner would pay for insurance. Same thing for commercial. It's essentially covering any building that is in a risk zone or wildfire heavy zone. They want to back up and protect. The reason this started to happen was because more and more wildfires have happened. Companies like State Farm at the time backed out of California for new homeowners. So they said, no more business. We're not even going to bother with it. We're going to pause all of our new business. The state got up in an uproar as it was back and forth. Allstate followed suit. Farmers followed suit. A lot of these major companies decided, okay, these are no longer risks that are profitable because it just doesn't make sense. In turn, the state had to fight back and, okay, we'll let you raise the increase here. We'll let you do this, X, Y, and Z. And it ended up costing the insurance companies more. It was a bad move unknown to them, but it ended up costing them a lot more. And we're going to find out more in the months to come how much the actual damage is. As of today, the average damage or the estimated damage is over $20 billion. The part that nobody's talking about is the insurance that wasn't available to customers. Because of all of these problems in these major companies, other companies stepped in and said, we'll do it. What happened was more wildfires happened and those companies almost went bankrupt. So now you've got a lot of companies that are hanging by a thread and now we have larger claims. What's happened also with that is because all of your big companies that were the main insurers of California, State Farm's number one, I think Farmers is number two and Allstate's number three. We'll actually have the numbers here. But when that was happening, those were the big guys. And they said, no more, not right now. What happened was they essentially had homeowners that don't have insurance. So there's more homeowners now through all of these pieces that are happening that don't have insurance. That's the scary part. I'll keep you guys updated when they start to roll out, but I've got a feeling over 20% would be my guess of all of the homeowners there don't have insurance. That's probably because of some sort of lapse, some sort of little trick of the system where they're like, oh, my mortgage company didn't find out. Now you're just on the hook for everything. Now, most Californians understood that there's also a program called the FAIR Act, and that was able to help you when you couldn't get insurance. Because of these issues they've been having, the state had to step in and say, okay, here's an insurance carrier that we're going to use. The problem they ran into is they didn't realize how big of an issue this was. Let's dive in a little bit further. So the companies that were the biggest insurers, these are the companies you can see the biggest impact. We've got State Farm at $2.75 billion in the state of California. Now that doesn't mean all $2.75 billion. Let's just say 10% of it was in those wildfire zones. So there are probably 200 plus million that they're going to have to pay out, if not a lot more, because they are the largest insurer. If it's close to half, then you've got $1 billion worth of repairs and claims and headaches and all those things. On top of that, having that reputation is going to be hurt because getting into those zones is going to be impossible. Getting the electricity back on, getting all the things working correctly is going to take time, and we're probably months away from seeing that. That falls on to the insurance company and how they handle those situations. State Farm, Allstate, Farmers, they've usually been pretty good with that. They usually have emergency vans and trucks and camps and sites where they can set up tent and allow people to come in and start filing claims. They're a lot more lenient with that. The problem is getting workers there to help on top of getting the repairs, the payouts, all of those pieces. The second insurance company on the risk, on the hook for this, is Farmers Insurance, and they're over $2 billion worth of risk in these zones. That's going to be a big impact on farmers. Farmers has not been doing so well with a lot of their claims, mostly from Florida, now felt into California. They just started allowing certain types of risk back into California, and now this happened. Next up, you have Liberty Mutual, which has over $900 million worth of risk in those zones, so they're going to be impacted. They're already, again, there's a video on this channel that talks about the issues that they're having. Although they're trying to grow again this year, this might set them back a little bit. We've got Mercury Insurance, who's a lot smaller than most of your larger companies, but they're one of the bigger players. This is going to hurt them a ton. USAA has a large risk in those zones. Allstate is the 5th largest insurer there. Again, their prices are actually according to what they need, so they're less of a risk. USAA is going to feel a big impact because they've been struggling. We've got Auto Club, which is AAA, and then we've got Travelers. Travelers is one of my more favorite companies in general because they've been really competitive everywhere. I'm hoping that doesn't affect them in the long run across other states. American Family is a large insurer in that state. That's the top 10. So those are your top 10 companies that insure California. The impact that you're going to see from this, what we expect to see, if it follows the suit with what has happened, what they're going to do is they're going to non-renew policies. Not as quick as you think, because there is a law that has just passed that once a fire or wildfire or major claim has happened, you cannot non-renew a customer within 12 months. That means for 12 months, the insurer has to carry or at least offer that insurance at renewal to the consumer in California. That doesn't mean after 12 months and one day that they're all going to go just, no more insurance, we're cutting it out, we're going to stop. They're most likely going to set back the state of California as far as insurance is concerned at least 5 years. But Mark, what about businesses? We're just talking about home insurance. Businesses also have a footprint in the state. There's several companies on the hook for businesses. We've got Chubb is now involved. We've got State Farm, who has their footprint there. Travelers is one of the largest as far as insurance going there. They're about $800 to $900 million worth of commercial real estate. But then we've also got to step back and think, okay, technically, if you know insurance, they're not really on the hook for most of this, because what insurance companies do is says, I'm going to pay the first $100 million to a claim. And then what I'm going to do is I'm going to insure myself outside of that. That's the reason insurance prices have gone so high, is because the underwriters, that's the companies that they use to write or take on that risk, they're the ones that approve it, are the ones that are on the hook for the bigger piece of the pie. That way the insurance company can take a larger risk, insure more people, and then they push the risk onto someone else. The larger companies is going to be a company called Mercury General. I'm not 100% if that's Mercury itself. I think it's a separate company, but they hold $839 million worth of risk there. Allstate is holding $792 million. Allstate is known as a large reinsurer, and so they help other insurance companies co-insure locations. Travelers, $805 million. So not only does Travelers have their own policies there, they're also reinsuring other insurance companies in those zones. Now, I didn't find that Liberty Mutual was listed on here, but I wouldn't be surprised if they weren't, because Liberty Mutual is a big reinsurance company that also, along with Allstate, are reinsuring a lot of the products that you have today. Your cell phone is usually reinsured by Allstate. A lot of the homes are reinsured from Liberty Mutual. Just in zones that you have, they've been loosening up the restrictions, which is why California started to get a little bit better as far as being able to find insurance. The issue that you're going to run into is now that this has happened, the reinsurance companies are going to tighten back up and say, nope, we're done for a while. And if that happens, the state is going to have to reenact their FAIR Act, which has been in effect, which has quadrupled in customers coming through the door. Their FAIR Act essentially happens in different states. Florida has one, Alabama has one, all of your high-risk states, because insurance companies are just like, There's no point. We can't make money here. What's the point of us insuring it? And the customers need it. Well, if there's nothing else, the state connects with a company or two and says, we're going to use you as our local location where if they can't find insurance elsewhere, you're the backup. It's almost that you always have an option for insurance, usually not a good price, but it's the only thing that's available when you're getting denied to even purchase insurance from all these other companies. The FAIR plan, as they call it, is essentially the fair access to insurance requirements. That's essentially bare bones as much as possible with some additionals that they offer on top of that. So I'm curious to see how that's going to affect, because I've got a feeling that a large portion of these claims are going to be part of that FAIR plan. For those that didn't know that was available, contact your local agent, contact your local state. I do have a few agents that I do work with in California. If you're outside of California and looking for insurance, also in California, I just try to link you to whoever I can. I'll put that link in the description below where you can fill out a quote and they can essentially connect you with someone that might be able to help. Again, most people's hands are going to be tied, at least at this point, unless other insurance companies are just ignoring the situation and saying it's still okay. I don't think that's going to be the scenario. I think in general, every insurance company is going to back off and just say, hold on, we've got to pause California, or at least reevaluate what's happening. Because one, the state won't let us raise rates to an X amount. Two, they won't let us use predictive models. Three, they can go get their own insurance from the FAIR plan. And four, why take the risk? So we're going to see California create a little bit of a domino effect to other states surrounding it, but more so in general. It's already been happening. The fact that it happened larger hurts worse, but it's already something that is already in play. I don't think the strategies are going to change. I think just moving forward is going to cause insurance companies to think twice about that state specifically. And what your thoughts are if you are in one of those risk zones. I'd love to hear that you guys are safe and you're making it through. I'm curious to see how much damage and what location you guys were in. If you are seeing a lot of smoke damage, the theft, the fire. We're just in general hoping that everything comes out in your favor. As far as the insurance industry, it's going to bounce back. It's going to be fine. It's going to be a few companies that are going to take some major hits. And whether they get up or not, we're going to find out here in the next few months. I'm Mark with Think Insurance. I'll see you in the next one.